Welcome back to our channel and welcome back to this video. In today's video, we are going to focus on South Korea's retail investing boom, the ants, and the household capital from real estate into equities. Retail investors, which are nicknamed ants, have poured trillions of won into the locally listed stocks and ETFs in 2026, making the Kospi one of the world's best performing indices for the second consecutive year. The rapid growth of the leveraged ETFs, aggressive margin borrowing, and record brokerage deposits point to a market environment wherein euphoria and structural reform are deeply intertwined. Let's do a deep dive and let's try and understand with respect to the Asia's market segments. First and foremost, we are seeing government as a market catalyst. The current administration has taken a multi-pronged approach to boost the equities, corporate governance reforms requiring directors to consider all shareholders, tax incentives for repatriating overseas investments, and higher taxes on multiple home ownership to discourage property speculation. Now, this is a deliberate macro policy shift, moving South Korea's saving culture from bricks and mortar to capital markets. So when we compare this to Japan's NISA reforms and India's retail SIP boom, Asia's governments are increasingly treating stock market participation as a policy tool. South Korea's approach is the most aggressive, with the government actively steering capital allocation at the household level. Next, let's look at the leveraged ETF risk factor. Now, while the leveraged vehicles hold only 3.7% of the South Korean ETF assets, they account for nearly a fifth of all ETF trading volume, a clear signal of speculative activity. The government is planning to authorize single stock leverage ETFs for blue chips like Samsung, further expanding the risk surface. Bus advertisements promoting ETFs to retail savers underscore how mainstream these products have become. This mirrors the patterns that we have seen before market corrections globally. Leveraged products in the hands of retail investors who are driven by fear of missing out create asymmetrical risk. A pullback could trigger forced selling and amplified losses. Next, let's look at the ants phenomenon, the scale and the velocity. South Korea now has over 100 million active stock trading accounts, roughly 2 per citizen. Brokerage deposits hit a record 103 trillion, with margin balances surging to 131.5 trillion. This is not a fringe movement, it represents a broad-based national shift in savings behavior accelerated by the 2025 rally that many missed. Now, the velocity of capital reallocation is as notable as the volume. Farmers are tying up capital in stocks instead of buying rural property. This structural shift has implications for the Korean property market, its consumption patterns, and the household balance sheet risk. Next, let's talk about the currency and the capital flow dynamics. The government's push to repatriate overseas investments is partly motivated by won's sharp depreciation against the US dollar in H2 of 2025, driven by retail outflows to the US equities. Tax breaks for selling overseas holdings and reinvesting domestically are designed to reverse this trend and stabilize the currency. This is important because this creates a feedback loop. Domestic market performance attracts capital home, strengthening the won, which further improves returns for the domestic investors. However, this also means the domestic market correction could trigger renewed capital flight and currency weakness simultaneously. And lastly, let's talk about structural versus cyclical. And is this sustainable? What we are seeing is that the semiconductor supercycle and the abundant global liquidity are the fundamental drivers out here, and the governmental reforms address the long-standing Korean discount. However, the speed of the retail inflows, the record margin balances, and the speculative leverage trading suggest cyclical excess layered on top of structural improvement. The sustainability question out here is critical. Corporate governance reforms are genuinely structural and long overdue. But when the former narrative dominates and the retail leverage hits records, the market becomes vulnerable to external shocks. A semiconductor downturn, global liquidity tightening, or geopolitical disruption on the Korean peninsula. In closing, what can be said is that South Korea's retail boom sits within the wider pattern of Asian governments using capital markets policy to reshape household savings and drive economic modernization. Now, that's what we wanted to share with you in this video. Hope you found this video insightful. Stay tuned in for the next one.